Every country on Earth is in debt, trillions of dollars owed by governments, corporations, and people like us. But here's the question no one ever answers. Who are they actually in debt to? If every country owes money, then someone must be the creditor. And the truth is far more disturbing than you think, because once you understand who the creditor really is, you'll never look at money, banks, or governments the same way again. In the next few minutes, we'll break this system down step by step, without jargon, without politics, just facts. No matter which part of the world you go to, whether you look at America's skyscraper-filled towering cities, the acoustically rich historic squares of Europe, or the most crowded metropolises of Asia, you notice something very interesting. Everyone is in debt. Countries, citizens, without exception, everyone. The United States is struggling with $38 trillion of debt, the highest number ever recorded in history. What about the European Union? They're not far behind. They carry around $14 trillion of debt on their shoulders. And Japan? You know, that giant country known for its technological power and its disciplined society? Its debt has reached $9 trillion, and there's much more. Even oil-rich countries, yes, you heard that right, places like Saudi Arabia and the United Arab Emirates, countries that earn billions of dollars in a single day, are drowning in debt. And the world's export champions, Germany and China, they also have extreme levels of debt. Naturally, one can't help but think, if everyone is in debt, then who is the creditor? Who exactly do we owe? This question pulls you, whether you want it or not, right into the giant financial world where money, power, and history intertwine and form a massive system. Because debt is not actually just a burden or a weight, as many assume. It is the invisible skeleton that keeps the modern world standing. So let's think. Every war, every crisis, every collapse, and every rise that the world has experienced so far, all of them had to rely on this invisible structure. And the moment you begin to tug at the threads of this structure, the moment you start pulling that string, you encounter a deeply unsettling and frightening truth. The world is actually not indebted to anyone. The world is indebted to itself. Sounds strange, doesn't it? We always thought there was a clear distinction between borrower and lender. But in reality, things don't work like that. Of course, this doesn't mean the system benefits everyone equally. In fact, quite the opposite. Today, the global economy runs on a massive debt surpassing $315 trillion. That's almost 3 times the size of the global economy. So how did we get here? To understand this, we need to rewind the film a bit. The first emergence of debt, a story that began on battlefields. Today, we constantly buy things with credit cards, transfer money through mobile banking, governments announce trillion-dollar budgets. But the story of debt didn't start here. Debt, contrary to what many believe, wasn't born on Wall Street, it was born in war. The year is 1694. England is engaged in a major war with France. But there's a problem. England's treasury is empty. No gold, no money, no resources. The king doesn't know what to do. And as a last resort, he turns to the merchants. He says, "Lend us money, and we'll repay you with interest using the taxes we collect in the future." And this is exactly how the modern financial system was born. To manage this system, the Bank of England was established. And for the first time in history, governments began to spend money that didn't actually belong to them yet. In return, the merchants, the lenders, received something extremely valuable, an official promise from the state, a government bond. This thing, which is now the heart of global finance, emerged back then as a groundbreaking innovation. France immediately copied it. The Netherlands refined it further, and the newly independent United States used the concept of national debt to finance its revolution and expand westward. Suddenly, debt stopped being a sign of failure and became a symbol of credibility. A state was considered powerful if it could borrow a lot. Empires stopped extracting gold from their lands and instead began extracting interest from the market. The battlefield, in a way, transformed into the balance sheet. Today, Debt has become the world's biggest export. 3 centuries have passed, and now debt has become an indispensable product of the world. Governments borrow money, banks lend money, funds buy and sell those debts, and the system keeps spinning endlessly. In short, everyone is both a debtor and a creditor. Paying taxes, they're used to pay interest on government bonds. Have a pension fund? That fund buys government bonds. Money in the bank? Again, it's invested in government bonds. So whether you like it or not, you're inside this cycle. Now let's come to the main question. Who is the creditor? To understand the topic more clearly, let's continue with the U.S. Half of the $38 trillion of debt belongs to investors, but 2/3 of those investors are Americans. Banks, insurance companies, investment funds, pension funds, and the Federal Reserve. The remaining $9 trillion is held by foreign investors. Japan is in first place with roughly $1 trillion. China follows with around $800 billion. So yes, technically, the U.S. owes China, but that's only about 2% of the total debt. So who is the real creditor? The United States itself. The U.S. Treasury issues bonds. Banks buy them. The Fed buys them back. New dollars are created. Taxes pay the interest. The interest returns to American pension funds. This entire massive system works like a circular mirror. But this logic isn't unique to America. It's a global cycle. Japan lends to the U.S. The U.S. lends to Europe through the IMF. Europe lends to developing countries through the World Bank. And they lend back to developed economies using their foreign currency reserves. And the wheel keeps turning. Everyone is holding someone else's debt paper. Imagine a poker table. Everyone keeps borrowing chips from one another, but nobody wants to leave the table. Because if one person gets up, the whole game collapses. The invisible giants of finance, the markets behind governments, there is another powerful layer. Perhaps the most powerful of all, the markets. So who buys government bonds? Hedge funds, pension funds, giant insurance companies, central banks, etc. They determine which country can borrow cheaply and which one will barely survive by paying extremely high interest rates. When market confidence is shaken, currencies collapse, governments fall, economies can crumble overnight. Democracy determines who governs the system, but markets determine who survives. And as always, the most important players in this system are the central banks. Central banks, the high priests of modern finance. Central banks don't just manage debt, they create it. When the Fed or the European Central Bank buys bonds, they create new money in return. Every new dollar, every new euro actually represents a unit of debt. In short, there is no such thing as money without debt. Every currency in your pocket is essentially an invisible IOU. This cycle has run smoothly for decades thanks to mutual trust. As long as investors and governments keep paying interest, even if they never repay the principal, the system works perfectly. But when trust breaks, we've seen what happens. Greece, debt crisis, Argentina, repeated defaults, Sri Lanka, collapse of fuel, food, economy. When the system collapses, creditors suddenly appear. IMF, rating agencies, giant funds. But once the crisis ends, the same game starts again. New debt pays off old debt. The system resets and continues. Debt exists not to be repaid, but to be rolled over today. Governments don't want to repay their debt. They never did. This isn't a conspiracy. It is the system. You borrow, you must repay. A government borrows, it borrows again to pay the previous debt. What economists call refinancing is precisely this. Interest becomes the indispensable product of the system. The reason government debts never end is simple. If governments repaid all their debt, the world would lose its most reliable financial instrument, government bonds. Think about it. If the U.S. suddenly said, I'm paying off my $38 trillion debt right now, the world's largest funds would lose their collateral, banks would face crises, the dollar supply would collapse, the global economy would freeze. That's why governments don't end debt. They regularly increase it. Debt is the lifeblood of capitalism. When trust breaks, numbers mean nothing when leaders say, We will eliminate debt. They are selling a nice slogan. It's not realistic. The goal isn't to erase debt, but to keep faith in debt alive. Because if the belief disappears, interest rates soar and the economy stops. The true face of debt: who wins and who loses? When we say the world owes itself, we overlook something. Interest is never distributed equally. At the bottom are those who must pay taxes. At the top are giant funds and banks. Debt works not only between countries, but also between social classes. This is another major reason for rising global inequality. Those who hold debt win, those who repay debt lose. And the most striking part is this: creditors are not villains and debtors are not victims. Both are essential parts of the same engine. The real question is, what happens to the world if the engine runs out of fuel? What if new debts can no longer carry the old ones? Then the question, who is the creditor, stops being abstract and becomes personal. Conclusion: debt is not a chain, but a balance, a fragile balance. The system we call modern finance turned debt into money. Governments print it, banks multiply it, investors buy and sell it, and we keep spinning in a vortex. Debt was once bondage, but today it's a systematic balance. But when that balance breaks, we see that debt is nothing more than a promise that cannot be kept forever.